Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you have joined us for the second day of our Precious Metals and Critical Minerals Conference. The next presentation of the day is from Roxmore Resources. Please note you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for a one-on-one meeting by clicking Book a Meeting. At this point, I'm very pleased to welcome John Dorward, Chief Executive Officer and Executive Chairman of Roxmore Resources, which trades on the OTCQX Best Market under the symbol GARLF and on the TSX under the symbol RM. Welcome, John.
Thank you very much, Greg, and thank you to OTC for hosting us today. And thank you everyone for tuning in. Appreciate your time to take you through the Roxmore Resources story. Roxmore Resources is focused on developing the very large Converse gold project in Nevada's Battle Mountain Trend. And I look forward to being able to give you an overview of why we're so excited about the prospects for Converse in the coming years. Some of the highlights of Converse is that it's very large. It's sitting at a current resource of around 6 million ounces. Heap leach project, very straightforward from a technical perspective. There's a lot to like about the project, from an immediate sort of de-risking and taking the project through the project milestones, but there's also a longer term growth story here that I think will end up displaying that Converse is truly one of the great gold mines of North America in due course. So we're excited. We've built a great team to take the project forward. A number of the team members came out of Roxgold, which developed the Yaramoko gold mine and Squala gold mine in Burkina Faso and Ivory Coast respectively, as well as Sabodala in Senegal, and also, and very particular to Nevada, were involved in the Frontier gold story leading up to its acquisition by Newmont in 2011 for the Long Canyon project. So a lot of us are very comfortable working in Nevada, and we're very excited to be back into what is arguably one of the world's great gold mining jurisdictions. We're well advanced into updating a preliminary economic assessment. Previous economic studies have been done around about 10 plus years ago at much lower gold price environments. So we're very excited to be able to, within the next couple of months, table a comprehensive preliminary economic assessment that I think will really showcase the potential of Converse to become a very substantial gold producer in its own right. Just a little snapshot of Roxmore. Roxmore was previously known as AXCAP Ventures. We got involved, or the former Roxgold team got involved around the middle of last year, and then the change of the name, etc., to Roxmore was in September. A tight capital structure. We're well financed at the moment. And we're well funded to deliver the PEA as well as the current drilling program. We have one core rig on site, currently drilling twinning some historic holes for sort of robustness and resilience in the resource. And we also have a 10,000 metre program, reverse circulation program, due to kick off in late March. So there's going to be a lot of drilling at the project, and we look forward to sort of really showing those results in the coming months as we go through that process. Just to orientate everyone, I'm sure a lot of listeners or viewers will be familiar with Nevada. We are at the northern end of the Battle Mountain Trend, as you can see here. And Battle Mountain is really one of the two major trends in Nevada along with the Carlin Trend. And as you can see here, a lot of household names. A lot of these projects have been company makers for the likes of Newmont, Barrick, SSR Mining. And we think that Converse has all the hallmarks of that foundation asset to take us forward at Roxmore. A couple of the highlights you can see: M&I resource, 5.5 million ounces at 0.53 grams. That's a very attractive heap leach grade project. The project's been considerably drilled. We have 326 drill holes into it, over 75 kilometres of drilling. That is continuing to build as we speak. We are drilling the project here today. The deposit comes close to surface, just over 30 feet or 10 metres from surface. So it is, we believe we'll be able to get into mining, and those mining studies will show that we're into ore very quickly, and that's coming up in the PEA, as I mentioned. And then I think what you can expect to see over the next 2 years is a very steady program of infill and extensional drilling, extending some of the test work around hydrogeology, geotechnicals, and further metallurgical testing, etc. And we're looking to deliver a preliminary economic assessment within the next 2 months, targeting April, and then over the following 2 years deliver a pre-feasibility study based on the infill drilling and further test work. And we believe that this project, as sizable as it is, sitting in Nevada with reserves in 2 years' time, targeting 5 to 6 million ounces, is going to be a very compelling offering and a great springboard for us to develop the project. And just getting a little bit further into the details of where we are, you can see great access to infrastructure. That red line there on the top of the screen is the interstate I-80 highway linking San Francisco to the east. So great road network, good power lines. We have power lines crossing the project, and we have an excellent county road system crisscrossing the project. So that makes access for our drill rigs very good. We can sort of see just some of our neighbours. We have the Lone Tree complex immediately to the north, a few miles to the north, produced over 4 million ounces over its life. And then immediately to the east, again, within 2 or 3 miles, is SSR's flagship operation, Marigold, which has been going for approximately 35 years and produced, again, nearly 5 million ounces and still going strong. So we are, I think, justifiably and arguably in giant country. And that's what we have with Converse sitting around 6 million ounces today. So we believe we're in a great address, both immediate neighbours to the north and to the east, and then the whole string of really sort of world-class mines running down the Battle Mountain Trend to the north and south of us. So it's an excellent place to be located. The land position here, you can see we've got a very strong claims position. We believe we've got all the land that we need to develop Converse. We have actually picked up a few more claims in recent months just to expand that land footprint and make room for surface infrastructure, etc. Water rights have been acquired for the project. That's a very important step for anyone who's familiar with working in Nevada. Securing those mining water rights is critical, and the Converse project has those water rights locked down, which is, I think, great news. And we have a 50 acres permit plan of operations for surface disturbance. Again, that's, a lot of early stage explorers in Nevada will be looking for a 5 to 10 acre area of disturbance. We have 50. Together with the county roads and progressive rehabilitation, we believe that we have sufficient access to land under that current permit to take this project all the way through pre-feasibility and into definitive feasibility study. So one of the sort of, time things that can hold projects up, certainly early stage projects in Nevada, is getting that initial plan of operations. We have it, and we're in great shape to prosecute our drilling and exploration and our further evaluation works. Just to touch a little bit on the resource, you can see here we are in the process of updating this resource. So there will be a new resource come out as part of the preliminary economic assessment in April. That is being done by SLR out of Toronto, Canada, a group that we've worked with extensively in the past. And I think fair to say a relatively conservative resource estimation group. So what we're looking to table is a very robust and defensible resource coming up in the next couple of months, and then using that to build infill drill to take it towards pre-fees and build from that point. But as you can see here, a very attractive starting position, considerable oxide. We believe we can grow the oxide close to surface. There's been some great results recently in recent months that indicate that there are some new high-grade oxide zones close to surface. But we've sort of got plenty of material here, and something, a great basis from which to sort of continue evaluating and moving the project forward, but also growing. And I'll take you through a few of those frontiers coming up. I think and I'll spend a little bit more time on this, one of the key questions for any project in Nevada is around metallurgy, and pleased to say that the metallurgical performance at Converse is excellent. So we see and have demonstrated a significant amount of metallurgical test work, which indicates that the material will leach on a heap leach. We will be looking at a 3-stage crush, potentially with high pressure grinding rolls, HPGR, as the 3rd stage of that 3-stage crush. But the material leaches extremely well, as you can see, up to 77% for oxide. So we're expecting to see across all material types, oxide, transitional and fresh, recoveries, whole of life of mine, north of 70%, which I think is excellent and really sort of, I think, answers one of the key questions or concerns investors may have about these projects. There has been a significant amount of test work done on the metallurgy at Converse. This is just a long section and a cross section for you to give you a feel for the deposit. I think one of the key takeaways here, certainly for me, is that it's one big deposit. It's in 2 zones, north and south, but it falls into one big pit. And really the upshot of that is we're looking at extremely efficient mining. This will be a big mining operation utilising the most efficient trucks and shovels to move dirt at a very efficient and low cost. And that gives us some efficiency advantages over a lot of comparable projects. When you look at it, we're not chasing many different pits, lots of scheduling issues, having to build haul roads, etc., waste dumps all over the place. This is going to be an extremely efficient outline and sort of project. So we're very happy about that. I think turning to the geology, one of the key attributes of this project is its consistency and its continuity. That was what really got us excited last year when we started when we had the opportunity to review the project, as well as SLR, our consultants. And I think that's highlighted by a hole we put out recently a couple of weeks ago. And you can see what we did is we twinned an historic RC hole. The RC hole had been drilled probably about 15 plus years ago. It had ended in mineralisation. It ran about 120 metres of really good mineralisation. So to really, I think, to verify the resource, to show some resilience and improve the robustness of the estimate, we twinned that with a core hole to check that there wasn't smearing, etc., downhole from the RC results. And the result was absolutely excellent. For the twin portion of that hole, so the first 120 metres or thereabouts, it reconciled within just a couple of gram-tonne metres. So really what the RC hole demonstrated was complemented and confirmed by the diamond or the core hole. We subsequently extended the core hole approximately another 75 metres. So we drilled an interval there, and you can see it on the slide. It was 194 metres at 0.71 grams per tonne. So considerably higher over a very long interval, considerably higher than the sort of the resource grade of the project. So very pleasing in its own right. I think what we took out of it as being even more exciting was that across the whole 194 metres, only 4 metres were below cutoff. So out of 194 metres, 4 metres below cutoff, that shows, I think, a remarkable level of continuity. So really what you're looking at is 190 metres down the whole length of the hole between half a gram and 1 gram. It's not spiky. It wasn't driven by small number of high assays. It was very even between 0.5 and 1 gram. And I think that is exactly what you want when you're looking at a big bulk tonnage operation with a large resource inventory. And we see that here at Converse. It was great to see, because that's what attracted us to the project. And we've sort of confirmed that, I think, in the most compelling fashion possible, with a core hole right through that core of that deposit to confirm, which was really encouraging. You can sort of see, I think, too, from both sections here, the deposit comes close to surface. If you're talking, if you sort of see some historic commentary around the project, you might read that there's people concerned about a large overburden associated with the project. I think if you were to start mining in the middle of that long section on the left, or on the western side of the cross section, you would have to dig through a lot of overburden, but a sane mining person wouldn't do that. They would start where the ore body comes close to surface. We have some very attractive grades close to surface, and the project comes, as I said, within 30 feet or 10 metres of surface. So the sort of the story of the large overburden really doesn't hold water when you look at the sections. And I think when we deliver the PEA, will see that there's a very modest and reasonable pre-strip required, and then progressive stripping of the ore body. We anticipate that this will have quite a low life of mine stripping ratio. It will be very competitive with the majority of projects, both comparable projects in development, but also in operation. We expect that the life of mine will be around 2.5 strip ratio, but much lower in the first half of the mine life. So we think there's some very compelling economics coming with the PEA. This is a section here, and I think just mentioned that there is the potential for high-grade oxide to be found. The hole here, CV25005C, was drilled last year. It was drilled to target sort of deeper extensions of the pit, sort of at the pit at the bottom, really sort of chasing some of those holes that had finished in mineralisation to extend mineralisation. What was particularly exciting here was it clipped a new high-grade oxide zone that you can see here, close to surface, 25 metres at just under 1 gram, all running oxide. So we're going to continue following that up. The core rig that's on site, once it's finished, its twinning duties will be moved over to do some of this drilling to look to expand this zone. And that's because it will have an early stage, or could have an immediate and early impact on economics. If we can expand the amount of oxide that comes into the mine plan quite soon, then that will obviously be very favourable for the economics. So that's more work to be done. The winter in this part of Nevada has been quite mild to date, so we anticipate that we might be able to drill the whole way through winter without going to sort of large extents and more expensive, keeping the roads open, etc. So fingers crossed. But I think you can look forward to seeing, you know, a short, sharp program targeting the oxide before we get into the larger infill and extension program for the balance of the year following the PEA. And metallurgy, I touched on this, very important for any project when you're looking at it anywhere in the world, but particularly in Nevada. The first question is the project refractory? No, it's not. This metallurgy here performs very well. If you were to put this, you know, test work indicates if this were to be milled, you would get around 95% recovery. So we're looking more at a heap leach scenario, and you can sort of see here that it does leach very well, even to the fresh material, compared to other projects around the parts in the Great Basin of the US. Significant amount of test work has been done, as you can see here on the left. Over 75 column tests and 1,000 bottle roll tests. I think this is really a comprehensive program. We will be doing more of it as part of the PFS program, but that's really just to sort of refine the granularity of the program. But I think, you know, I think enough, certainly from our perspective, there's certainly enough historic work, and that was most recently done in 2018 by Caps Cassidy in Reno. We believe Caps Cassidy are the premier heap leaching experts in the Western USA. They're doing the processing and operating design flow sheet for our PEA. So we think we've got the best people on that for the job. And they conducted that program back in 2018 with a significant number of columns and bottle rolls. And I think we are very comfortable with where the metallurgy sits. Won't spend too much time here. A lot of this is going to be, I guess, redundant when the PEA comes out. But I think it's suffice to say, and our expectation is that when we stack up Converse as the preliminary economic assessment against a number of other projects in Nevada, both in production and in development, it's going to show very well. We think that from a grade perspective, it will be above, you know, be in the top half of the projects. From a strip ratio, from a size, you know, number of ounces, recovered ounces, from operating costs, etc., it's going to show very well. We're really looking forward to being able to share those metrics in the coming months, because I think it's really going to, I think, put Converse front and centre as one of the premier development projects, not just in Nevada, but around the world that's owned by a junior. So again, it's a fair bit of big talk, but I think the project will back us up, and we'll be able to show a project that is actually is very compelling and will take a lot of people, I think, by surprise. This project has been hiding in plain sight to some extent, and I think when we're able to showcase what that looks like from quality, with quality work, utilising quality consultants, a range of conservative inputs, it's going to be very hard to knock this project. It's going to show extremely well, and we can't wait until we can do that, to be honest. So, so just to wrap up the story of Roxmore, we put this team together to advance Roxmore, to advance Converse. The old AXCAP had several projects in it, but it became clear that Converse was really the sort of the lowest hanging fruit and the jewel in the crown. So we've brought the people together, we've raised capital to take it forward. We're going to take, I think, a giant step forward with the PEA. The drilling is ongoing, and we've had a number of the people who've been involved in this project have had very successful careers taking projects from exactly this stage, from resource stage through economic studies, pre-fees, PEA, pre-fees, definitive feasibility study, and either put those projects into production or sold them to a much larger company. I mean, we sold Frontier to Newmont in 2011 for $2.3 billion. And that was when $1 billion actually was a big number in the mining business. So we're confident that we have the people, we have the financing, and we have the project to take the project forward. So at that point, I think I'll stop and tackle some of the questions. I'll just read them out. Bear with me. So question is, you've just uplisted to the TSX from the CSE. How do you see this changing the size and quality of the institutions that can own Roxmore, and what kind of valuation step change do you think is realistic as that transition happens? Look, I think that's an excellent question. I think for us, it's a uplisting to both the QX, the top market on the OTC, as well as the TSX, is really about sort of establishing our bona fides as a credible developer. We think that we're comfortable operating at the standards of those more rigorous standards of those markets. I think I tried to buy some shares through one of my brokers back last year, and they couldn't do the trade on the CSE, so that was quite instructive. So they can now do that on the TSX, fortunately. So I thought that was interesting. For us, it's really about the long-term building the share register that will take us forward. So we're going to need to raise capital. There's no use in pretending that we won't. But what we will try to do is build out the institutional component of that register to enable, to have people with the pockets to be able to take us from PEA, pre-fees, definitive feasibility, and ultimately the building component of the equity component to build that. So I think we're very excited. I think it's a great place for us. It's really a core component of us taking this project and refreshing it, as I mentioned, hiding in plain sight and showcasing it as really what we think is one of the premier development stories in the market. There's work to be done. We'll need to show the evidence to that, but we're very confident that we have the ability to do that. And I think valuation for us, we are very cheap at the moment. 140 odd million Canadian dollars. That's not representative of a 6 million ounce deposit in any stretch. It's certainly not one in Nevada. So we know we've got work to do, and I think the PEA allied to uplisting will sort of broaden our appeal to investors. So we're looking forward to tackling that. One of the other questions, given the strong comparison to operating heap leach mines like Marigold and Round Mountain, are you starting to think about a production profile that puts Converse into the top tier of Nevada open pit producers? Absolutely. I think whilst I won't front run the results of the PEA, I think you can expect to see a very large production profile. I mean, we're sort of starting north of 5 million ounces mineable. Recovering that at 70% or 70+% will give you an idea of how much recovered gold will be in this, and then that sort of ran out over a 15 to 16 year mine line will lead to very significant production. We are seeing sort of a two-stage approach, with probably the first 8 to 10 years being extremely strong production that will moderate a little in the back half, gives us plenty of time to find the rest of the deposit. But I think you're going to see a very, very large production profile, and I think it's going to take people by surprise. But this deposit has the chops to deliver that, so we're very excited about taking that forward, and that's coming down the pipe very quickly. So another question, since closing the Tora transaction and rebranding as Roxmore, you've effectively reset the story around Converse. Do you think the market is still anchored to the old AXCAP narrative, and how much room does that leave for sentiment to catch up? Look, I think that leaves a lot of room for sentiment to catch up. This is not your grandmother's AXCAP anymore. It's a very different company, a very clear focus on Converse. I think the strategy that AXCAP had back in the day to collect cheap assets was a timely one a few years ago. But we live in a bit of a different market environment now. The financing is available to progress a project like Converse. And really the reason for the merger with Tora and the subsequent rebranding from AXCAP to Roxmore was to focus exclusively on Converse and take that project forward. This is the sort of project that junior companies really should want, and we've been able to find one, and we're going to take that forward. So I think it's all wrapped up. Look, I think we've still got a few, we have a sort of warrant position still outstanding from the AXCAP days. We are starting to see some of those warrants get exercised, so it's actually turning into a good source of funding for us. But I think, by and large, I think the market has responded well to the change and the new team coming in and the program that we're putting together. I'd like to think it's resonating with investors. There's more work to be done. And again, I keep harping on it, but the PEA, I think, will be, really the key piece of the reset. And it's going to be very hard for investors to ignore what that study looks like, given it's coming with very strong provenance. It will be very conservative, it will be very defendable, and it will be a very large and attractive project. So we just sort of waiting to get that out. So another question, you've assembled many of the same people who created over $3 to $4 billion of value at Roxgold, Frontier and others. Internally, do you view Converse as having equal or greater potential than those past successes? I could have written this question myself, so I appreciate it very much. I think I've said to some people in meetings that I've had and that I've been discussing with, I think that Roxmore and Converse project probably is the best value equation I've ever been involved with at this stage. So when I looked at this project in June last year, we did about 3 months of work, deep dive, pulled it apart and got in board, did the initial financing. I think that the runway that this project offers is the most compelling that I've ever seen. And I think it's actually coincided with a great time in the market. I mean, for example, with Roxgold, which I think we ended up being very successful. When we started that journey, the GDXJ was about $100, and when we finished it, it was about $30. So we sort of battled a very tough tape across the 7 or 8 years to deliver a multiple X, a multi-X return. I think this one, the setup is much more supportive, but we've got a project that I think will act ultimately. I think this will be this, as I say, will be the best valuation growth scenario that I've ever seen. So that's why I'm very keen to keep digging in and advancing the project. Another question. Given the scarcity of large, low-strip, heap leachable gold systems in the US, do you think the market fully appreciates how unicorn rare this type of asset is for a junior to control? Look, I don't think it does. I don't think that that's necessarily wrong, or I don't understand that. I do get that. I think what we need to do, and this is on us, is really set the table for people to see the potential of Converse. Now, I've had the benefit of getting into the data room and having my consultants pull the resource apart, etc. So I've had a bit of an early seat, and so I don't necessarily expect everyone's going to sign on as quickly as I have. But I think the key, when we table the PEA, it's going to be very hard to ignore. And I think what we'd like to do is make sure that anyone who's still sitting on the fence has significant FOMO and regret at some point in the coming years. That's our job. Our job is to make this as valuable as we can and sort of unearth that potential. The project has everything we need to do it. We just need to peel back the layers and show people. So it definitely doesn't appreciate the rareness, the scarcity of this project and its ultimate potential. I think that's okay. That's the opportunity. That's the opportunity that we've been enjoying and will continue to enjoy. as we re-rate it and get a better value for it. But I think we're up for the challenge and really keen and looking forward to it. Another question, with Newton and Rattlesnake Hills in the portfolio, do you ultimately see Roxmore evolving into a multi-asset development platform, or is the goal to monetize non-core assets to turbocharge Converse and minimize dilution? Look, again, I think it's a great question. I think the question is correct. We are looking to focus pretty much exclusively on Converse. We do see value in Rattlesnake Hills and Newton. They are earlier stage, and we are conscious that we need to husband our resources and focus. So I think it's, whilst no decision's been taken at board level, I think we are exploring opportunities to potentially monetize those or get some value to be able to put into Converse, because that's where we see the lowest hanging fruit. And I think I might have come to the end of my time. So I appreciate everyone's time and interest. Please feel free to hit the book a one-on-one meeting. We'd love to take you through the Converse story. Thank you very much.